Hello and welcome to another Deep Value video. Today we're taking an in-depth look at Costco Wholesale Corporation, ticker symbol COST. We'll dive into the financial metrics, assess the company's growth, and ultimately try to find its fair buy price. Costco Wholesale Corporation is an American multinational corporation which operates a chain of membership-only big box warehouse club retail stores. As of the 26th of September 2024, the stock is priced at the $908 with a market cap of 402 billion. Now, let's dive into the key valuation metrics. The price to earnings ratio stands at 57 and the price to cash flow ratio stands at 33.2. Moving over to the company's growth over the past 5 years, we can see that its revenue has grown by 58.6% and its bottom line has increased by 71.9%. In terms of earnings per share, there has been a growth of 71.4%. Notably, the number of common shares outstanding is 444 million, a 0.4% change over the period. Now let's assess the company's liquidity and solvency. The interest coverage ratio is 51.2, indicating the company's solid ability to handle its debt obligations. The quick ratio, a measure of the company's short-term liquidity, is 0.44. Additionally, the long-term debt to equity ratio is 0.26, and the total debt to equity ratio is 0.31, both indicating a low debt load. Shifting to the cash flow statement, cash from operations stands at 11 billion, reflecting a growth of 74.1%. Cash from investing activities is minus 5 billion, with a increase of 73.5%, while financing activities are at minus 2.6 billion, showing a plus 137.8% change over the same period. CapEx has also increased by 44.2%, and free cash flow has grown by 110.2% to 5.4 billion. Moving forward, let's look at the return metrics to see how well the company is utilizing the resources. The return on equity is 30.6%. The return on investment is 30.94%. The return on assets is 10.36%, both indicating how efficiently the company is generating returns from its investments and assets. Additionally, the return on invested capital stands at 15.6%, a crucial metric for understanding the effectiveness of the company's capital allocation. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis by using a discount rate of 10%, a revenue growth rate of 10% for 10 years, and a perpetuity growth rate of 2%. We get a fair value of $346.4. Secondly, using a multiple duration of 20 times trailing 12 months free cash flow, uh, 25 times trailing 12 months free cash flow, 20 times earnings and operating cash flow, we get a fair value of $387.3. Finally, the price target is $925, and putting it all together, we get an intrinsic value of $552.9. And using a 50% margin of safety, we get an acceptable buy price of $469.98, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I rate Costco as a sell because I believe that Costco, although a very well-run wholesale store with a very high ROIC, I believe it's just too overvalued. I mean, like 30 something times cash flows, twice the valuation from a discounted cash flow analysis. This is just ridiculous. Uh, After all, earnings are still earnings, and a dollar as cash flow from a tech company and from Costco are the same thing. And if you overpay for Costco, then your dollar is not really worth anything more. In fact, it's worth less because at the current market valuations, you can actually get a tech company that's growing faster at a lower multiple and with higher ROICs, with better short-term liquidity. I just don't see why you'd buy Costco at these levels. I mean, if you held until now, it would make sense to maybe hold a little bit more. But what do you expect Costco to do? I mean, uh, 10 times their free cash flow. There's not really that much space to grow, even with their very good capital allocation. They may be a very good retail business, but that's just it, that they're very good, very big retail business with not much left in them. But if you want a 10% return, You should probably invest in them, but I don't know, it's just too overvalued for me. Personally, I would consider investing in it only if its price dropped to, I don't know, sub 550, sub 500 levels. Thank you for watching. If you found this video helpful, please like and subscribe for more deep analysis. See you in the next video. Bye.